Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. Last week's theme was not something different than what we have been seeing lately. We observed broad dollar strength against majors as well as emerging market currencies. USD/INR was trading comfortably above 83, only to end lower after suspected central bank intervention. Yuan was trading at 7.36, very close to its all-time lows. Euro had multiple attempts to break 1.07 levels. All this without any significant data point. Let's hear from JK the themes that can drive the markets this week.
Good morning, Swaraj. Yeah, so the theme this week will be the inflation, of course. We'll have inflation data from India as well as from the US this week. India numbers would be published tomorrow, while the US numbers will be published on Wednesday. India CPI inflation is expected to slightly moderate from 7.74% to 7.4%, and that's not a big thing because we are still far above the upper end of the inflation band that RBI is mandated to maintain. Therefore, don't expect any dovish approach from RBI anytime soon, uh, because unless we come back below 6 consistently or closer towards 4, we will not have any rate change from RBI. And moreover, you need to remember that global crude prices are still trading near 90, which is a multi-month high, and this will put upward pressure on the headline inflation. Unless we see a bigger drop in the core inflation, do not see the monetary policy supporting the risk sentiment for the market. Same way in the US also, we have the core inflation, which is expected to maintain last month's level, but on the headline inflation, we are expecting the year-on-year number to move up from 3.2% to 3.6%, and that is a big jump, definitely. Therefore, again, the dollar will get some support due to higher yields going forward, and also the fact that Fed will maintain higher for longer stance, at least, if not rise in rate, if should the inflation numbers come even higher. Therefore, I would be focused on these two numbers this week for getting a direction overall on the market. On Friday, of course, in fact, in the whole of last week, we did not have too much of numbers to focus on. The Friday was not much of a difference, but we did see some focus on the consumer credit in the US, which saw a big drop. That is obviously something that was to be expected because of the way the interest rates have gone up, and the consumer, the credit cards, even credit cards have seen a lower credit expansion, and this is possibly indicating a slowdown in consumption going forward. And now we have to see whether the rise in inflation, if at all, based on the crude prices, is going to be much worse of an impact than the slowdown in the economy. So it is going to keep the Fed and most central bankers on a very delicate balancing act. On balance, I think every central bank will maintain a higher rate for longer period. That includes even the Indian central bank as well. On the markets, yields have gone up again. Some dip was seen on Friday, but again they have been inching up towards the recent highs. And what caught my eye was the rise in JGB yields today to a new 14-year high at 0.69%, on the 10-year, and that's keeping the yen also on a stronger footing today. But otherwise, mostly markets have seen the rise in US yields. Upper end has not been broken for quite some time now. Therefore, the range should be maintained until we get some fresh clues on inflation or on the monetary policy. On the currencies, dollar seems to have found some resistance higher above 105.20, And technically, after 8 weeks of fall in the euro dollar or 8 weeks of rise in the dollar index, one can expect some correction as we head into the inflation numbers this week. Therefore, I see euro dollar correcting towards 1.08 or slightly higher than that. And on the yen, I'll be very, very closely watching the yield, because whenever it went to these levels, we have seen the Bank of Japan coming out with a fresh program of buying JGBs from the market and push down the yields. So far today, we have not seen any such announcement. So if there is program that is freshly announced, yields can move up further, and that can put pressure on the USD, which has already dropped more than 1% from its recent peak. The other determining factor for the USD INR, which is the Chinese yuan, almost met the previous high at 7.37, and now trading below 7.34. Therefore, I would probably be cautious on a couple of times failing at those levels. The speculative community at least might be tending to take profit on their long dollar positions in the Chinese yuan, and that, coupled with some correction that I expect in the dollar index, can bring down the Chinese yuan also somewhat. So all these factors put together for the rupee, and also the guiding force in the Indian market, or in the Indian rupee, the central bank, who intervened quite heavily on Friday, can see the rupee correct down to 80 to 80 levels in this week. And of course, a breakup that can see it towards 80 to 50 also. So upside remains capped at 83.20, and downside open till 80 to 80 at least for the time being. And then we'll take it by the data that is coming up this week. Thank you.
Thank you, JK. And the two major data points that are coming out this week is the Indian inflation and the US inflation data. Indian inflation is expected to moderate, but still remain above the upper band of inflation mandate for the RBI. Also, one important thing to note is oil prices are trading near 90, which should put pressure on headline inflation. US core inflation is expected to remain similar to previous month, but the headline is again expected to move higher. One interesting thing to note is the Japanese yen. Japanese yen has shown some strength after the Japanese yields rose to 0.69%, keeping the yen on the stronger side. And for rupee, the major factors, especially like Chinese yuan, which is comfortably trading below 7.34 after almost touching the all-time lows at 7.37 ish. The yuan is showing some strength, because of which dollar rupee can correct down to 80 to 80. If you're keen to hear more about the Chinese economic slowdown and its effects, do join in tomorrow for our monthly webisode series, where we have market-renowned experts like Saugata Bhattacharya, who is the chief economist of Axis Bank, along with Matthew John, who is the director of research here at Almus, discussing the Chinese economic slowdown. Tomorrow between 5 p.m. to 6 p.m. The link will be in the description. Thanks for listening, and tune in tomorrow. Thanks.